David, we were just chatting there as Juliet was going through the first word, and you said to me, Manus, I said, where's the rate rise? And you said, Manus, it's gone. It's gone like Harry Potter's cloak. Has it really gone away?
Yeah, I mean, where did it go? Oh, look,
your pockets are filled with...
Yeah, you know, all of a sudden, everyone's, rate rise in the UK, and then it just disappears. You know, these people tell you there's going to be a rate rise, and then they forget they said so. A lot of revisionists. As you know, in financial markets, there are two types of people, those with short memories and those with no memories. So people can't remember even saying that. So there's no ways, I think, the UK will raise rates. And I think if they do, the pound will suffer. It will suffer because it's a mistake. Now, Canada raised rates, and the currency rated like 8%. I mean, if you look at dollar Canada, because that is a cyclical currency. It doesn't have structural, and it doesn't have political problems. They can focus on the cycle, the low unemployment rates and average earnings and Phillips curve, blah, blah, blah. We got a political and structural problem. That's the nature of the currency. The currency is not a cyclical currency that thinks about interest rates. This is a currency where we focused on the same day that retail sales are higher than expected. Barnier made a comment and sterling went down. It doesn't respond to the data. It responds to the politics and the structural nature of the current account deficit and budget deficits in the UK. Those are the issues at hand, not the economic cycle. And I remember the Phillips curve, page 27 of my textbook, when average unemployment falls below a certain level, inflation rises without limit. Come on, grow up.
Matt Miller, help me.
So, David, it doesn't matter then if we get continued inflation, if we don't get real drops in GDP. I mean, 130 at the pound doesn't seem strong to you?
Okay, let's go through this. Why is inflation higher? Because the pound is lower. So the pound is lower because of the whole idea of Brexit and what's happened there, right? So it's a political phenomenon that has caused the currency to fall. The currency is causing inflation. Inflation rises, real incomes get squeezed. Real incomes get squeezed, imports go down, and the current account shrinks. That is the way it works. That's what I'm saying. It's a political and structural idea. It's not, oh, inflation's higher, therefore we need to raise rates because of the... No, it's because of the currency. Inflation is higher, and inflation is higher to slow down imports, encourage exports, and the current account needs to shrink. And we're in a rebalancing phase where sterling is incredibly helpful.